Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 230, 18th of May, and the market, while it was trying to move up further, it was restricted today and it was consolidating the gains from yesterday. So the market has had a bounce after the steep fall. Now it is to be seen whether this bounce will convert into a leg up, or is it just a dead cat bounce and the market may fall down. So we will keenly be looking at overseas cues over the next couple of days to determine that. Yesterday we had a DB where we showed you that investing even at the peaks and having a reasonably long runway made sure that you did not lose money. In fact, made some reasonable returns over time. And today we are going to do the same, but with calculation of SIPs. So if we started a SIP near a peak, how did we perform after that? So while in both cases we will end up with some returns, but you will see how doing SIPs are far superior than doing lump sum investments, especially when the market is at a heightened stage. So today's market was sort of a post, or I may say today's market was sort of a lull, because we had a tremendous move yesterday and the market was taking time to digest that. FMCG, pharma were the two sectors that really did well today, 1.25% up on FMCG and 1% up on pharma. So it did seem like money is moving towards defensive stocks. Real estate, public sector enterprise and banking, they took a reasonable sort of correction today after yesterday's jump. And as you can see on the weekly chart, we have FMCG, pharma, consumption and autos. Autos has been leading over the past week as well as 3 months. So autos is the only sector in the last 3 months, last 1 month, which has been in the green. And over the last 3 months, energy has been the only sector, along with FMCG and PSE, who has had some gains. So very small pockets of outperformance are there over a month and 3 months. Market, in my view, is still very uncertain, but as in most of our in all of our strategies, in fact, we don't really pay much attention to what we think or what we may feel. While I may give you a personal opinion about what I'm feeling about the market here, it has no context when it comes to running the strategies. So the strategies run on models that have no connection with what is our forecast or what is our feeling about the market. In terms of indices, all flat, small caps maximum up at plus 0.34, Nifty down minus 0.12% at the lowest, and all in the middle. So really flat market today. Within weekend investing small cases, MI20 up 1.76%, a very good performer. MI35 up 0.75%, MI25 up 0.54%, MI50 up 0.51%, all doing well. And the others were reasonably flat or slightly down. And as I mentioned yesterday, the difference between absolute momentum and relative momentum strategies continues as we are in large cash in absolute momentum strategies. In terms of gainers, so several gainers: Sudarshan Chemical 19%, Wockhardt 15%, GE Shipping 10%, JK Paper 10%, MRPL 10%. I think we have these two in some of the strategies, and some of the stocks are really flying. And on the downside, Route Mobile down 15%, Metropolis down 10%, PB Fintech 6%, Dr. Pathlab, Lal Pathlab down 6%, and Delta Corp after a GST hike on online on casinos down at 6%. So mixed bag of gainers, losers, etc. etc. So again, we are considering 4 peaks: Feb2000.com, December 2007 start of GFC, Feb 2015 post Modi run, and December 2019 pre-COVID. So these are the 4 instances where market made significant peaks and went down after that. And we will consider what would have happened had you started sipping on the index. I'm not even saying the strategies, because the strategies will do better in most cases. But what if you just started sipping on the index, maybe using an ETF, maybe using some index fund? What would have happened? So index, if you started at 100, you hit a new high after 3 years, as I showed yesterday also. And of course, in the long term, that 3-year period was insignificant compared to the rest of it. What we need to see, however, is how would a SIP would have done. So a SIP in these first 3 years essentially just stayed flat. We are doing a portfolio 10,000 SIP monthly, and total contribution over this entire period is 26 lakhs. Portfolio value is 1.35 crores. XIRR is 12.76%. So the first couple of years, and I'll just refresh your memory, that from 2000 to 2003, the index was in a drawdown and then it went up. So 2000 to 2003, your SIPs here were virtually flat with no returns and no relatively negative as well. At least not what we can see on the line here. And then of course it took off and off and off and off, and you can see how well this SIP has done. Much higher than the XIRR that we saw or the CAGR we saw on the lump sum investment yesterday. Peak number 2, 2008 fall, 9 recovery. By end of 10, it was again flat, but then again a fall and then again a recovery. So about 6 years of up and down and no net gain. Over a longer period, after the 6 years, the market took off, and after COVID crash, we are still sitting up much higher than the initial starting point. Again here, monthly 10,000 SIP. Yes, there was some drawdown here below this curve. This is the absolute contribution and this is the portfolio value. So portfolio value went below the contribution for some time. But then even before 2010, before index came back to zero level, you can see that the portfolio value is much above above contribution. So it is already in green in terms of XIRR. And then it just continues going up very smoothly before it hits the COVID crash and up again. So overall 10,000 SIP, contribution of 17.3 lakhs, current value of 40 lakhs, XIR of 11%, much above where Nifty CAGR would have been. Peak number 3, again starting from 100 and going down to March 16, Feb 16, and then coming back up by Jan 17. So about 2 years of a dip, as you can see here, 2 years here as well. And then of course going up and COVID crash and up again here. So here also, once you start sipping, there was minor periods where portfolio value went below contribution. But more or less it went very smoothly upwards, and even in the COVID crash it dipped just marginally below contribution. So your money never really went into any deep red, and you contributed 8.7 lakhs with a monthly SIP of 10,000 and current value is 13.5 with the XIRR of 11.7%. So again, no major damage at all, even when you are starting at a peak. So the whole psychological impact of starting at a peak and then having a huge bloodletting in your portfolio is not happening here. And the last one, just before COVID, if you invested, you had a dip, but within 7-8 months the index came back and then it kind of went up 40-50% and it's dipped a bit now. Here again, if you started with a monthly 10,000 SIP, portfolio value went down just a little bit. Maybe when the contribution was 40,000, it was at 32,000, and that was, I think, the maximum gap here. And then it just kept going up, and 2.9 lakhs invested monthly using 10,000 monthly SIP is now 3.52 lakhs, and XRR currently is 15.89 over this period. So extremely encouraging results from even starting your journey from the peak of the market. So this worry about that started investing at the peak, oh, so I will be, I've missed out and so on and so forth, it is not the right way to look at the market. If your runway is long, 3, 5, 7 years kind of runway, then you are seeing that market is cyclical. And even at starting of that peak, and I'm running that public portfolio where I've started very near the peak. October 1st is where the first sip of that long-term sip strategy that I keep posting every Tuesday is there, and it is in negative right now, XRR of negative 15%, and I'll keep running it for 3 to 5 years and show you every week where that result is. And I can almost, I can't say the word guarantee, but I can promise you that my sense is that it will very soon be in the green, and it will show you fantastic performance. And the strategy is not really material here. I'm using a very basic CNX 200 strategy, which is supposed to yield a long-term return of 15% odds or so, something like that. So I hope you get confidence by looking at all this data. This is real data. I mean, there's nothing that can be fudged about it. So this is the proof of the pudding, so as to say. And so don't get disheartened if you are having some negative returns in your portfolio right now. Keep sipping, keep following a self-correcting strategy. Could be the index, could be our momentum strategies, could be anything else. And happy investing. So see you in another video. Bye.